Welcome to Tradiers, the Trader's Edge. I am Jim Iuorio. That's Bob Iaccino. Thank you guys so much for the support you've given us in this show. This is one of my favorite shows because it's live, because there's a ton of interaction. And thanks to Tradier for hosting us their hub. Please also join us at unfilteredinvestor.com. You are going to be excited about our guest today. But Bobby, first off, oil kind of half seemed like it was breaking out of my little triangle but then it didn't really follow through. I want to see a settlement above 66. Do you think the time has come for crude? And I know it's premature talking about it considering who our guest is, but let's just set the table.
I will tell you that the pattern itself is kind of nice because Mike Arnold and I have looked at this pattern for a long time, just a real technical entry pattern when we have a view. And it's got a really stupid name, but the name makes sense. It's called Kiss the Trend Line Goodbye. So oftentimes you get a breakout above a little trend line, especially with triangles, and then you get to move back down to that trend line, and then it rallies off of there. Those are really high probability rallies. Now, the measured move is, depends, but those are really high probability rallies from a technical standpoint.
So good. So it's almost come back down to the trend line, and kissed it. So then we would be heading higher. Okay.
Yeah, be positive on that.
Yeah, so stocks, the BLS numbers came out today, unemployment number. Is the market just flashing us that nobody gives a shit about them because nobody believes them anymore?
Maybe. So here's the funny thing. This number, if you were to pull the best thing out of it, in my view, we can ask our guests as well, was that you had the labor force participation rate going up while you had the unemployment rate going down. So just, regular language, what does that mean? It doesn't mean that the unemployment rate is going lower because people aren't looking for jobs, because they're falling out of the labor force. All in all, it means more people are working, not fewer people are looking. So that may have a lot to do with the immigration situation. It might. But I got a whole nother rant on how partisan Matt Miller from Bloomberg is.
Oh, I know. I saw you getting pissed at him today.
Oh,
by the way,
God.
I have not seen you streaming it from your Twitter. I tried to retweet it like I normally do, but I don't see you streaming it live. Are you?
Yeah, I should be.
Okay. You look at that to make sure while I bring on our guest, who is one of our favorite people in the world. It is Tracy Shuchart, who is the chief economist at NinjaTrader Live and NinjaTrader Group. Let's bring her on. Tracy, how did you survive that week of 50-degree temperatures in South Florida? Was it awful?
Sorry, I have too many sides, but you streaming here and there. I'm tech challenged, guys. Sorry.
We're all tech challenged. Well, you're younger than us, though. So, yeah, you should do it good. Yeah. How are you? Everything good?
Everything is good. This is my first week back. I just got back from Riyadh in Saudi Arabia.
I saw that you were there. How was that?
So it was really fantastic. Learned a lot, and really we focused a lot on kind of energy security and stability in the markets and things of that nature. Not, I didn't get any inside information on production numbers, guys, but just a really good conference overall. Got to talk to the Saudi energy minister, he's kind of the big head honcho. So that's great trip.
Awesome. Yeah, that is really cool. Is that the first time you've ever been to Saudi Arabia or no?
Yes, it is.
Yeah. Wow. That's so cool. And what were you there? Were you speaking at an event? Were you there consulting for someone?
No, I was just just a guest there. I was just invited as a guest. So,
that's so cool. Well, good for you. Okay, so today you saw the BLS numbers. And you heard the question I asked Bobby. Do we think that that's just a bunch of bullshit, these numbers now, when you see the massive revisions and crap like that?
Well, I mean, we kind of knew that we were going to have the that 870 whatever it was revision. We heard in September that it might be as much as 911. So we knew that huge revision was coming on the benchmark. As far as today's numbers go, I mean, I think everybody was quite taken by surprise.
Yeah.
for certain, a blowout number. I don't know if that's a product of them changing the kind of the birth death model or or if the economy is doing really good, because, some of the other data that we've had out kind of suggested a softer labor market. With the ADP weekly number was a little bit softer than anticipated, but a little bit softer overall. And so jobless claims were a little bit higher. So, I think we kind of need to see. And usually January is a softer number for the labor market and for the BLS number. So, kind of confounded. Seemed markets liked it until they decided that, oh, wait, we might not get rate cuts. Then they didn't like
yeah,
it.
that's the candy, right? Yeah. So if you dive down into it, let's say for a second that we believe all of it. Non-native work jobs, way down. Native-born work, way up. Government jobs, way down. Private sector jobs, way up, with a caveat. A lot of those are healthcare, which that's kind of seems like a hybrid to me. So what is your take on the internals of it? Does this reflect a good economy?
Well, not when you have everything focused solely in one sector, right? Because before, all we saw were government jobs added, right? Now we're seeing healthcare added. And I do expect healthcare to keep growing because people are getting older and people are getting sicker. And, we do have the boomers kind of aging. And so, I do expect growth in that sector overall. But to have it all on that side of the boat is kind of a little bit concerning to me.
Yeah, that's what I thought as well. Bobby?
Yeah, so to Tracy's point, I just want to point this out because, again, it was something that I had to discuss for a client this morning. The ADP report, I think, was about less than half of the expectations last week. That was the monthly. Prior to that, I said on one of these shows that the weekly ADP report hasn't been around very long, right, Trace? But it was down like 4 weeks in a row, 5 weeks in a row after a quick peak. Then you look at the jobless claims, which I think tomorrow the jobless claims actually matters a little because it's been up 3 weeks in a row. And on top of that, we get a great jobs number. And by the way, that's right after Hassett and Trump said, you don't have to worry too much about if there's a negative jobs number, right? Almost like Trump was doing that thing where he kind of screws with people a little bit. But so the number came out good and the whole number was good. I noticed, by the way, there's not a lot of attention about the 865,000 annual revisions lower in jobs created. That wasn't really a big thing this time like it was last time. But Tracy, when you look at the overall economy, I think Atlanta Fed GDP, last time I looked at it, it's about 4.2. It's early, right? Where do you think it's going to come in? And by the way, real quick, Widge wrote, Luis, I don't know if you see this. Widge wrote, Twitter didn't automatically send out the video with Adam Taggart and Stephanie Pomeroy earlier. They're doing the same thing to this show now. So I did actually repost it out, Chemi. But anyway.
Now it's out. I see that. Right.
Yeah, I found it and I reposted it. So what do you think the overall economy is looking like? We're seeing a little bit of demand increasing, right?
A little bit of demand increasing. What I'm more concerned about is we are seeing an uptick in debt defaults, right? Although it is more concentrated among lower income and young borrowers, but still we are seeing it tick up. We got that information on what day is it? It's yesterday.
Yeah.
And we're kind of the highest level since 2017, which is a little concerning. And that includes, 30 days late, 90 days late, 60 days late, and 120 days late, and then severely derogatory, which means you have repossessions or charge-offs or anything like that. So that's a little bit concerning to me. What also is a little bit concerning to me is we had the bankruptcy information come out, and on average, they're doing, we have and these are big companies. We're not talking small caps, big companies filing for bankruptcy at about, six a week or 6 a month, one of the highest numbers ever. So I do think that, there are some parts of the market that we should be concerned about. And, everybody keeps talking about this K-shaped economy. Obviously, the lower end of the K is still really getting hurt. And I'm very concerned about the debt and default issue right now, because that obviously takes away from consumption, right? If you're right in debt. So just some parts of the market I'm a little bit worried about. I think, I mean, 4.2 sounds a little bit crazy to me.
Something just dawned on me as you said it, and this kind of scares me a little bit, because the K-shaped recovery, when assets are booming, and still the people who were feeling rightly so that they were left out, sentiment numbers are in the toilet, despite the fact that assets are going higher. And as a knee jerk to that, we get guys like Mamdani in New York. I know there's a socialist in one of the big cities in California too. Miami socialists are crowding the scene. Let's say the economy actually does have a recession and those people are even hurt worse. Are we just going to see an acceleration of them saying screw it all and voting for the most toxic, destructive candidates? Is that a possibility?
Well, obviously.
Yeah.
It's already happening. And I think if you look at the election midterms coming up, I think the fear is not, I think everybody thinks Republicans will likely lose the House. But what's going to be more concerning is to see how many socialists are going to be voted in. Forget Democrats.
Yeah.
I'm going to be looking at, how far are we swinging to, the socialist communist end of things. So just something to keep an eye on, especially during midterms.
Before Jimmy asks about crude oil, and I do have a lot I want to ask you about that. What is your view on natural gas? Is this just an absolutely crazy seasonal spike, and now we're going to go sideways until we refill storage, or is this something that's actually structural?
I think that the thing with natural gas is we have a ton of it. We produce a ton of it. Our wells are getting gassier, and that's a good thing, because I think, everybody's talking about the LNG story. I think that's great. I think that's great for equities tied to LNG. But I don't expect, U.S. natural gas prices to spike or to stay elevated for long. And that's actually a good thing, because that makes our exports cheaper, right? And that also makes, we're building out all these data centers. We need cheap natural gas to run these data centers, because we certainly don't have enough power. And that's the easiest thing to bring on as quick as possible. I love nuclear. I love the story, but it does take a lot longer. And, the build out is happening now. And so I think that natural gas is just the easy way to do that, and the most inexpensive way to do that, and it's cheap and abundant here. And so I don't expect, if everybody's talking about nat gas, I just don't expect prices to see anywhere near the levels that, say, Europe sees by any stretch of the imagination.
Because they don't have much natural gas, and they get it from Russia, right?
Well, we're getting it piped in. Now they get Russian LNG still, but that's supposed to end in 2027. And they buy a lot of natural gas or LNG from the United States, and Qatar are probably their two top providers right now. So
you mentioned some of the natural gas. I don't know if you said drillers, suppliers, whatever. So what names are you looking at that might be interesting in that?
So, I actually like midstream. So I like pipelines, like Enbridge or KMI. KMI or Enbridge, EMB. I really like midstream right now, because I think we need to build a lot more pipelines. Those can be done quickly. And so I kind of like the internal story in the U.S. If you're looking just for an exporter story, you can't go wrong with Cheniere LNG or, a big company like that that's going to be exporting. But I really think the opportunity is within the United States. And I really like the midstream sector, because we need a ton of more pipelines for all of these data centers as well.
Bobby, I want to give you the next question, but I just popped up a chart of Kinder Morgan. To me, it seems like you sell the 32 call and buy like 3 of the 34 call, because it's coming into some serious resistance of that high that it put back in early 2025. You looking at the chart too, or no?
Yeah, I'm looking at it. I would need a pullback to do anything here.
It looks great, but it looks like it needs a pullback. Yeah.
If I got a pullback, go ahead, Trace.
Yeah, absolutely agree. I mean, they have run far, and I've been on this story for over a year. I mean, when we were in New Orleans together, that was what I spoke about was midstream. So I still think the theme is alive, but of course, I wouldn't chase things up here.
Mother, you also gave me nuclear probably 2.5 years ago, and you gave me UEC, and I think you gave me NLR too. You see no change in that story, right?
No, I love it. I mean, when we started talking about that, I mean, it was trading around $7.
Yep.
It made it as high as I think 21 recently. I mean, it's still up there. I think that story is still far to go. We just added uranium to the critical minerals list from USGS. And so that story is, I think we're still at the beginning stages of that story because of the time it takes to build out.
Yeah, I owe you another dinner for that trade. That trade's worked out really nicely for me. And I also have NLR as well, which has also worked out. You didn't give me that specifically, but I bought it based on what you said about nuclear. Bobby?
I want to go into the chat because it's been kind of piling up and start with Remo. First of all, Remo said, hello, Tracy, Bob, and Jim, which he always just kindly says. And then he said, did you catch Einhorn's comments on CNBC for gold? I don't watch CNBC. It's crap.
Yep.
But then going to the second one, I don't know if you guys saw it. Then going to the second one, gold has seen massive gains in recent years, though it faced some pressure last month following President Donald Trump's Fed chair nomination announcement. So the question, I guess, from Remo is, what do we think of gold? So let's start with Tracy.
No, I definitely don't think the story is over yet. I think it went a little too far, a little too fast. I welcome the pullback and some consolidation for a move for the next leg higher. But, I welcome this rest period for right now. I think it just went too far, too fast. But the underlying fundamental issues are still there. You still have central banks buying. In fact, you're just starting to see Western central banks buying, particularly Poland and Italy. It's even starting to buy. Are they, is this going to catch on? Are more central banks going to be buying? We still have geopolitical issues. You still have the issue that, we had in 2022 after we kind of confiscated Russia's funds, where people are a little bit scared of, they kind of want to hedge their bets, particularly if they're holding a lot of U.S. treasuries. And so I think I don't see any reason why it would fall out of bed for any reason. And I go back to the central banks. You have to understand central banks don't care what price it is when they're buying. They don't care. They're not looking for a deal. They're not scalping, right? And so they're just going to buy. And so I just don't see a clear path to that ending anytime soon.
So I mentioned probably 3 weeks back, that once we reach 5,000 and continue to go parabolic, I was like, it might be time to finally sell some of my gold, which I did, but I missed out on about 12% to the high. But of course, I've never sold anything. 4 times I've bought the low and sold the high in 34 years that I've been doing this. So I didn't expect to do it here either, but I did buy some back. I bought some speculative gold back. I haven't sold any of the core positions for the same reasons. A couple of years ago, Tracy, I did just a real quick back of the envelope, actually front of the trading card study. I did it on here. And I said, okay, if we sort of calculated out how many times the dollar has been devalued, where should gold be? And I came up with numbers in between $341,000 an ounce to $7,800 an ounce. So I went with 7,800. And I wasn't really public about it. I think I said it to a couple of people at one of our shows. They laughed at me. Now I think I'm low. Now I think I'm low based on all what you said. We still have geopolitics. I think a little bit of this is U.S.-Iran, a little bit of this rally back. Miran, I don't believe, would have gotten the job unless he agreed that at least the conditions were somewhat amenable to a rate cut.
You mean Warsh?
What did I say?
Miran. Yeah.
Yeah.
I speak Bobby, people. I'm here to translate. Yeah.
Yeah. I bet on Miran on Kalshi, but anyway.
I bet on Hassett.
We were both wrong. So looking at it from that perspective, I'm trying to figure out, Jimmy, and I want to get your opinion on this as well, because I think the question was for all three of us. Where am I wrong? Where is Tracy's fundamental analysis wrong, or do you agree with us?
No, I agree with 100%. And I was very, very public about selling out of 30% of my silver, less, but still a significant part of my gold in the last like 3 weeks of the run up. And again, I missed probably the top 10%, and I don't care. In some ways, but then I bought some silver back as well. I didn't buy gold back because I have a substantial amount of gold. I think the fundamental story, if anything, is getting stronger, not weaker. And you said, like, before, the countries that were buying and stockpiling gold were China, Russia, countries that didn't like us very much and would love this pipe dream of a non-dollar denominated world. Now with Poland and Italy joining in, it's like people are like, no, we love the dollar. We love you, US. But just in case, we'll buy this. Yeah.
Right.
We think the Italians are counting their gold chains or no?
By the way, I have a big crush on Giorgia Meloni. Is that bad? She's so, when she talks and she's so fiery, I love Giorgia Meloni.
I like her too.
Okay, good. I know, and my wife would not care that I have a crush on her because she doesn't think that I'm going to run away with Giorgia Meloni. But anyway, so I think the fundamental,
Neither do I, by the way.
Right, exactly. I think the fundamental story is the same, and the question just becomes technical. Where do you buy it? And I think I'll be looking more to buy it than to sell it. Yeah, so that's it.
All right.
Yeah. Can we go to crude? Which is what I want.
Yeah, go ahead.
So Tracy, my contrarian play for the year, which has been good so far, has been crude. And this started on it's been beaten up so far so fast. And then I do have the thesis that from a domestic standpoint, I think our economy is going to meet a couple different tailwinds at the same time. Not the tax cut story is real. And I'm not talking about tips and overtime. I'm more talking about expensing for businesses. The deregulation story is real. Is the reinvestment story that Trump keeps trumpeting? Well, okay. Anyway, that didn't work out. Right? I didn't like, as it came out, I didn't like it. When this goes live,
I loved it. It was spectacular.
Anyway, so if our domestic economy is going to boom or some level of boom, it seemed to me that crude was underpriced. I still think it's underpriced. What are your thoughts?
I've been talking about this since last year, saying 2026 was the year for crude oil.
By the way, I may have.
Oh,
he's frozen. So I think what he was saying is I may have stolen this from you.
But yeah, so I've been talking about this since last year, literally saying 2026 was a year because of a lot of factors. One being our wells are getting gassier. Nobody's spending CapEx in the United States for more shale wells. Everybody's buying production, right? Everybody's been buying production. Well, all the mergers and acquisitions have been literally buying production. That kind of big mergers and acquisitions, we had like a big segment in like 2016. And then a couple of years ago, after COVID, we had another kind of big merger acquisition phase going on. I think most of that is generally done, but no, they're not, nobody's spending on shale wells right now. And after, 2 oil crashes, the oil companies woke up and said, we're not, we went from 20% of the S&P 500 to 2% of the S&P 500. And we are just not going to get investors back. I mean, the bankers got burned, private equity got burned, everybody got burned that kind of got involved in that sector. And so they're just not having it anymore, right? They're looking offshore in Guyana, in Suriname, in Namibia. So
I've never even heard of. I thought those were all rare earth metals. Bobby, I'm going to throw the question to you too, but it's a 2-part question too. She said the wells were getting gassier. Since you got me on keto carnivore, I think that's the cure to gassiness. What do you think of that, Bobby? And also, do you agree with Tracy's analysis?
Well, again, this makes some of our viewers mad, but I only shit twice a week now since I've been on carnivore, and it's a joy.
I never have gas, ever.
This is so much information.
We share information, Tracy.
I do agree with that analysis. I will ask you a question on the back of it, though. So November, U.S. crude production dropped. I think it was 86,000 barrels. Is that a blip?
No, I think, first of all, I don't believe the EIA's numbers. I'm sorry. I just don't believe it, because I'll tell you why. Because they mix NGLs, they commingle NGLs with actual oil. And NGLs, natural gas liquids, are not oil. They cannot be used for the same thing. You can only use them for chemical feedstock. and you can't use them for any other purpose that you could for oil. And so I don't believe their numbers. I think they've been overstating their numbers because they've chosen to commingle, and it's not showing us how gassy these wells are. And if you go to talk to people on the ground, and I have, because I have friends that actually own wells, and they will tell you that it's getting sketchy out there.
Interesting. Okay, I might even be increasing my positions more. But let's take a quick time out. Luis, will you put the banner up? You guys, this is the time of the show where I ask a favor of you guys. I totally appreciate all the support you give us. So I could ask one little thing, is that to scan that QR code and try Tradier Pro for 3 months for free. We talked to people who've traded options for decades and some who've traded options for days only, and they both say the same thing. Tradier Pro is top notch. Please just scan that code, try it for free. And now back to the show.
Luis, can we put up Widge's comment here? It's a little off what we're talking about, but I just noticed it and I just realized what he's trying to say. It's the one, Luis, that starts with the healthcare jobs. Widge says the healthcare jobs are weird. I think some of those healthcare jobs could be coming from off the books to on the books. Maybe that's immigration or even government benefits related. That's super interesting to me.
Okay, and I have some insight on that too, because my mother, for like 2 years, was in different homes and stuff as she was 94 to 95 years old. And every worker, at each place she was at was an immigrant. And I'm not commenting at all on their status of legality, but there is a lot in healthcare of immigrant populations filling those jobs. So that might be to put support to off the books to on the books. Tracy, do you have any input on that or no?
That is not my sector, guys. I really haven't done enough due diligence there to be honest with you.
Yeah, no doubt about it. Right. Same. So, but that is an interesting comment. So
yeah, it was a really interesting comment. So back to the task at hand. So crude oil, where do you think, like when I'm looking at a chart of crude oil, I already said it to Jimmy earlier and you were listening. I think it's going to struggle to get through $70. That's more of a fundamental view. But you said 2026 is the year for crude oil. Now, looking at when you said it, you've already been right. But where are you looking for crude oil to go? And I speak to this, like on top of that, you were just in Saudi Arabia. How much input or influence do you think Trump has on the Saudi Arabians to go, hey, I need you guys to kick it up?
I don't think not much at all, to be honest with you, because a lot of what was spoken about is the lack of spare capacity that these countries have. And that's not something they readily want to admit, right? You don't want to admit your production might not be what, your capacity might not be as high as you think it is, you stated it is. You know what I mean? So that was kind of very big for those countries to admit that, the spare capacity is just not there. And so I think, and if we look at the production numbers, even though the group of 8, they've raised the ceiling, right? The production ceiling, as they've taken those tapers offline, but they're still underperforming. That, I mean, production's rolling over. So they're not producing, all the way up to their ceiling. In fact, we are seeing a rather big rollover, and I just posted it today. But let me see how many barrels it is. Sorry.
I can look for it if you posted it, Tracy.
Yeah, I like, it was a repost that I post this every month because whatever. So they're down. Their crude oil production fell 235,000 barrels per day in January alone. So they're actually literally rolling over from the high production in November, which was still below their ceiling. And now they're getting further and further away from that ceiling.
So Tracy, when I hear what you're saying, it sounds to me like you're saying $74 crude. I don't know why that number's jumping in my head. Maybe because it's highs from 2024 and 2022. Is that kind of what you're saying? Or what's the level where production starts to ramp up? And then how long does it take to meet demand?
Well, that's going to take a while. I think, first of all, I don't think, even if we were at like $70 a barrel for, you'd have to be there like at a somewhat of a steady level for, at least 6 months, if not longer. I still think at $70, even though it would be profitable for these companies, particularly in the US, I don't think they are going to rush to ramp up capacity, particularly because you do have a president that's saying, I want $50
Right.
oil.
Does he
right?
mean it though? Do you think he means it?
I think Chris Wright gave him a good talking to, because he's kind of been a little bit softer on that. And the last number he threw out was like $60. And so I think Chris Wright, he is an oil guy. That's their energy secretary. He is an oil guy. He knows. He hears complaints from, all the oil lobby. Of course, he knows what's going on in the shale industry, even though he, likes to say, "Oh, we have the cheapest, oil in the world." But so I think he did give Trump a good talking to, that it's going to make the problem worse in the long run if you keep prices suppressed, because you're really not going to get anything out of them. And I think it's scared. You had Continental came out and said they were stopping production in the back end, which they started the back end, right? And they came out in January and said, this is just not profitable for us, so we're going to cut our production in the back end.
Shit, man, I don't have enough oil. By the way, do you watch Landman?
Of course.
Of course, Landman's great.
Of course he does.
Of course. I had to get Paramount just to do it. Like, it kills me to have to pay for TV. I had to get Paramount just to watch it.
That show is brilliant. I tried to watch his other show, Lioness, and with Zoe Saldana, is that her name? But there's no, like, Billy Bob Thornton makes you laugh. And the Lioness, there's no laughing. It's only intense.
Lioness is very intense.
What's that?
Yeah. Lioness is very intense. And sorry to jump in, Tracy, but Lioness is the first time, God, I shouldn't say this on a recorded show. I never believe, like, the skinny 5'1" woman, Tracy, punching the guy my size except 6'5" and knocking him out. Yeah. Lioness is the first time I ever believed it. Like, because they were just so good at the way they did it. It was just so good. Zoe Saldana is like holding her own in fights with big men, but losing the fight eventually. So it was just seemed more realistic. That is an intense show, and I loved it. Yeah. Chevron's interesting to me, by the way. We're only about 2% from its all-time high.
Chevron, Exxon. And what's really interesting, you guys, I think that kind of was a foretelling of what's going to happen to oil is, last year, even though oil prices went literally nowhere and we're kind of at the bottom of the range, we had oil companies starting in the back half of 2025 started performing really well. They were outperforming the price of crude oil, right? They were doing well, aside from the fact that crude oil was going nowhere. So to me, that was also kind of a tell.
Okay, so go ahead.
No, go ahead.
Well, what I was going to say is I was going to sort of slightly change the subject, but so Libya just awarded the first oil blocks in like 20 years to Chevron.
What does that mean? What do you mean awarded an oil block?
Go ahead, Tracy. It's
you bid for oil blocks, so they have oil blocks that they're blocked off. They know that there's oil there. You bid for them. You lease them from Libya. You go in and you start drilling for oil there. Most of their blocks are offshore.
It's soft equivalent of leases here in the U.S. Jimmy.
Got it. Okay.
And I also read the other day that Venezuela is back up to its production numbers. Now that's production numbers from before they dropped from 1 million to 400,000. They're not back up at 3.5 million. No. And we are hearing some of the talk from U.S. majors that they're not really excited about inheriting some of Venezuela's like ecological debt, some of the massive problems they have. So what's your sort of view on those two regions in terms of supply additions?
Well, I think Libya, a lot of that's offshore. That's going to take a while to get back up and running. You have to remember their country also was in a civil war forever. And so a lot of their oil infrastructure was destroyed there as well. So you kind of have to start all over with that country.
And Jimmy, what did Landman teach us about offshore drilling?
It's risky and expensive.
Thank you. Go ahead, Tracy.
It is risky and expensive. So I don't expect anything out of Libya anytime soon. Venezuela is supposedly back up to 1 million barrels per day. They were actually at 1.3 million barrels per day. So they're not all the way back up.
That was before the magic of socialism was entered into their country?
No, they were at
3.5
million barrels before the magic of socialism came in.
Nice.
and then they went all the way down to under like 500,000 barrels per day. And then they started raising again once Chevron was back in there. And I mean, a lot of things happened in the Trump first administration and second administration. But they were up to 1 point, they're at what nobody wants to go in there. I mean, literally Exxon said it is uninvestable. I think it's going to cost billions and billions and billions of dollars. And I know Trump did say, yeah, they're going to pour billions into Venezuela. They're not. You know why they're not? Because oil time horizon is 10 to 20 years. In 3 years, Trump could be out and Trump will be out and a new president could come in and change the whole policy. And that they just spent billions for what? So
could Trump beat them into doing it? Could he?
No.
He can't?
No.
Okay. No. All right. Bobby?
Can we go to Bitcoin, Tracy?
Absolutely.
Sure.
Start up.
All right. So I spoke at 2 separate Bitcoin conferences here in Southwest Florida, where we both live, over the last.
You didn't even invite me.
It wasn't my purview to do that, but I'm doing another one in a couple of weeks, so I'll reach out to you. But I spoke in 2 of them since like the middle of December. And the concerning thing to me in both of those, they bring me on as the skeptic. Now, I'm not really against Bitcoin, but in those rooms, relatively, I am, right? And the thing that bothered me the most about some of these very smart and very learned investors is that, number one, I asked them to raise their hands if they owned only Bitcoin. And about 75 to 90% of the room raised their hands. Because first they said, how many of you own Bitcoin? They all raised their hand. How many of you own only Bitcoin? Only a couple of hands went down. And then I said, how many of you think Bitcoin cannot go down? It's impossible. And those hands all stayed up. And what bothers me about it is obviously we're still at 68,000. So a lot of the people in the room who bought it 500, 1,002, they don't care about this move.
Right.
But where do you land on this in terms of the probabilities of it being completely worthless, which I don't think that's going to happen, or the probability of it just being so bad that the selling begets selling, which we may have already seen a little bit of it?
Well, you may have seen a little bit of that. I think my concern here is that once you got institutions involved and all these ETFs and all these banks involved, then it kind of takes away from exactly what Bitcoin is supposed to be, right? And I also think that also helped kind of, kill the volatility in Bitcoin as well as kind of kill the price a little bit, because now you have all these institutional flows that you didn't have before, and now they have more power over price per se. You know what I'm saying? Than the people before. And so that's kind of my concern with Bitcoin. And, I say this having, I own very little Bitcoin. It's certainly not my focus. So everybody kind of knows that, but just looking at, and I would say this about anything, under the same circumstances, I get worried when all these institutional flows suddenly have pricing power over anything else.
Yeah. I had somebody, and actually Mike McGlone, he's going to be in our show next week. I was talking to him about Bitcoin. He was at the first conference I spoke at, and I thought he made an unbelievable point. I said, yeah, as soon as a CME got in, I should have just bought as much. That's the first time I bought it, by the way.
I said I should have too. Yeah,
I said I should have bought like crazy, because then BlackRock and State Street, and Mike McGlone said something to the effect of, look, if they sold if there was a cyanide pill and people wanted to buy it, BlackRock would sell it. He goes, I don't think that's a reason to think that it's a good asset. It's like, oh my God.
Are you sure we can criticize BlackRock on the show? I'm not sure we can.
I don't think we can.
Okay. Yeah. So by the way, you both were talking about Bitcoin, and neither of you mentioned something which I think is interesting and perhaps important to this discussion. Bitcoin put in its highs in October. The NASDAQ put in its highs in October, probably roughly around the same week. When the NASDAQ started lower and the AI trade started broadening out to different things, Bitcoin seemed to follow the NASDAQ down. When I see the NASDAQ go down 9% and Bitcoin go down 50%, that makes sense to me. I mean, Bitcoin doesn't have an intrinsic value and they're directionally highly correlated. Do you think that has a lot to do with this? I guess, Bobby, I'm going to throw that question to you first. Do you think that it's just still correlated with the NASDAQ?
I'm gonna put up a chart while I talk about this because Jimmy, you know I talk about that a lot.
Yeah.
It's one of the things I said at the Bitcoin conference that it has to stop its correlation to the NASDAQ.
Before we
And
take
more importantly, it needs to stop the negative correlation to the NASDAQ, right? But look at this chart. This is NASDAQ is the bar chart, and Luis, put it up when you can. And the blue line is Bitcoin. I don't know if I'd even call that correlated anymore.
But directionally, is there, okay, so
I don't see the NASDAQ as going lower right now. I see it as going sideways. Now, yeah, it's had some dips.
Yeah, this is interesting to me because
I just noticed this recently because I've always said they're correlated to downside. That's horrible for Bitcoin. Look at the rest of it. I mean, you look at the rest of it. I mean, I guess I could leave it kind of like this. Look at the rest of it. I mean, it's ridiculously correlated. Yeah. And there have been some exaggerated periods like here, for example. But the correlation has been pretty spot on. Then you get here. I mean, I don't know if anyone's expecting this kind of move in the NASDAQ. Certainly not driven by Bitcoin, right?
No, but I don't think the move, I think that little bit of the NASDAQ and the big one in the Bitcoin, those are equal. I don't even know how to vocalize exactly what I'm saying, is that Bitcoin 50 is the NASDAQ's 10 in my opinion.
Yeah, I mean, it's fair. That's not the case. We know that for those of you who don't know, correlation means not only the same direction, but the same relative amount of a move. That's what correlation means.
So I think tease that part of it out and just go directionally correlated.
That's fair. I mean? If you say directionally correlated, it still seems to be, I mean, you just look at like this little move versus this little move, and they're similar.
Yeah, similar. Okay.
So anyway, go ahead, Tracy.
Do you have anything to add to that before we go to stocks?
No, not really.
And that's that.
No, we love transparency. Okay, let's move on to equities. Okay, so last Friday we had that tremendous reversal day, and S&P looked great. What do you think of S&Ps this year? Do you think we're handling the broadening out of the AI trade gracefully and elegantly at this point in time? And is that indicative to you of strength in the market?
Are you talking to me?
Who else would I be talking to? You think I want to know Bob's opinion on that?
Yeah, I mean, we are kind of struggling here. S&P is struggling, over 7,000. NASDAQ certainly lagging all of the other index markets. We are seeing, strength in the Russell and strength in the Dow.
By the way, I've noticed the strength of the Dow, but I haven't been too lazy to look into why the Dow is so strong. I don't like the Dow. I don't trade the Dow. I think it's
I don't either.
There's a couple names that are dragging it higher, right?
So yeah, mostly, it's very healthcare is, a big mover.
That's not of interest to me, right?
And consumer staples was one of the best sectors today. So
it's interesting.
Yeah. So, I think it's notable that we're kind of struggling here. I think because tech is so heavily weighted in the S&P and that it's lagging is putting pressure on the S&P too, and why we can't, we keep hitting that 7,000 and we just can't seem to get over it. Right. It's just selling. So, it's very strange that it's been, this has been kind of a sideways market. I mean, overall for the year, NASDAQ's down like 1.5% overall. ES is like flat.
Flat, right? Yeah.
Russell's up 13%.
That was also my big trade at the beginning of the year too. Was buy the Russell, sell the NASDAQ, which I actually did do. But anyway, yeah. So
Tracy, I don't know if you know Shayna Orchik, Shayna Seisel. Which one does she go by?
I call her Orchik.
Yeah. All right, so Shayna Orchik, I told her that I just bought the Russell, and she said I'd rather buy the S&P 600, which I then bought the next day. So listen to Tracy, listen to our guests, because that has been the much better performer of the two that I own. I own the IWM and the SPSM. So, and Shayna's recommendation is by far the better performer. Go ahead, Tracy. I'm sorry. I just want to tell people to listen to you guys.
Yeah, and even equal weight. If you go equal weight S&P ETF, that's outperforming, the SPY. So, just an interesting rotation. I am personally glad to see that, obviously, because I'm heavily into metals, mining, and oil and gas.
Right.
So I'm not complaining whatsoever, since I've been more of the
What else?
industrial.
Okay, so I like metals, mining, oil, and gas too. We've established that, and I want to get increasing that. But Bobby's been talking about staples for quite some time. What other sectors are you looking at that? Like, do you think banking does well if we do really have any sort of economic expansion, or do you not think we're having an economic expansion? What do you think?
No, I think utilities kind of been beaten up. I kind of like utilities here a little bit. Because again, we're going to need more power. They're going to have to invest, and 2025 wasn't such a great year.
Can you give me one to look at? Which one are you? When are you looking at? Anything specifically?
So, nothing specifically. I mean, I used to trade a lot of. Let's see, what was I in?
Okay, can you guys hear my dogs barking or no? Can you hear the dogs barking? Okay.
Yeah, a little bit. SO is good, or D Dominion.
Oh yeah, I remember SO. I used to own that for a long time. I owned SO, Southern Company.
Yeah, I've been in and out of that one for.
And it pays a decent amount too, right?
Years. Yeah.
Yeah. So do you when you talk about utilities, is part of that you think rates are going lower and that dividend looks more attractive?
Yeah, I think so. And so, we'll see. But I like utilities here. I talk to a lot of, I talk to a lot of people too. And a lot of people think consumer discretionary is going to do well. I haven't really looked at that sector very much, to be honest with you, because it's not one that I focus on. But I am hearing that from other people that I've interviewed. So just throwing that out there.
Robert?
I was going to say it was probably me, but you haven't interviewed me in a long time. Consumer discretionary was one of my. See, I got you back on that one. It was one of my. It was one of my picks for this year, and it really hasn't performed. But what my thesis was the second half of the year that no tax on tips and no tax on overtime would actually make a small dent in consumer discretionary.
Well,
but
and if you get tariff check rebates, right?
Yeah, some people are already talking online. I don't know how reliable it is that they're getting some of the biggest refunds that they've ever gotten in their careers. Probably has a lot to do with, they made more money because they're older. But, with the new tax structure, with the no tax on tips and things, people are getting these rebates. And I mean, they're Americans. They're going to spend them. We all know they're going to spend them. Yeah. But if you're looking at consumer staples and utilities, and you're not sure, I mean, Dominion, I know. The State Street Utilities, the XLU ETF, also pays a dividend.
How much it pay? Do you know?
But Dominion is, I think, 4.1. I think that's what Dominion is. XLY, it's 31 cents. So what would that be? Right around the same, maybe around 6%.
Oh, XLU has a nice little pattern there. I think once it turned up and broke out, I think it's back to the highs again. Yeah.
But I mean, Tracy's going to be a lot better at a utility individual pick. So if you're looking at it over the next couple of weeks and you saw now, I think I agree. Some of the ETFs have a decent dividend.
Yeah. What else do you want to hit before we wrap it, Bob?
I'm good. I mean, I covered everything I wanted.
Yeah, I covered everything I wanted too. Tracy, you have anything else? Any parting words?
No, I think I'm good.
By the way, if you guys don't
good.
Tracy on NinjaTraders Live, you are absolutely crazy. Tracy's the best. And is that an everyday thing, correct?
So, Monday through Friday, I am on in the morning, and it's a macro show. So
it's awesome, by the way,
8
too.
8 a.m. to 8:45. So
love it. Okay, good. This has been Tradier's the Trader's Edge. Please join Bobby and I and Mike Arnold at unfilteredinvestor.com, where we talk about some of the things we talked about here and then go into tradable, more granular detail. Please give that a go. Give it a try. I'm Jim Iuorio. That's Bob Iaccino. Follow Tracy on Twitter, which is stupid for me to say because you all already follow her on Twitter. This has been the Trader's Edge.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.